So you did say a little earlier that you would like only those who have a 5-year horizon. Obviously, long-term investors who are building or accumulating wealth. So not someone, for example, who needs a regular income coming out of their investment. So a lot of times when an investor writes to us, they write in saying that I want to plan for my child, I want to plan for my future, I want to buy a house after 10 years. Tell us how important it is to have a goal when we approach an investment and not just buy a mutual fund because it sounds interesting at the time.
It depends, because it depends upon what age you are starting investing, what are your goals in your investing, and what is your ability to go to the ups and downs of the market, Now today with your inflation ranging between 12 to 13%, the real inflation, and your interest rates being much lower than that, the fact that you put money into fixed deposit or anything, you already started making a loss. Suppose if you had a 1 crore deposit 10 years back, 10 years back you could buy at least a 1-bedroom apartment in a suburb with a 1 crore rupees. Now you were always thinking, my money is safe. You're looking at the return of your money. You're not looking at return on your money, nor are you looking at inflation taking down the purchasing power. Now 10 years back a fixed deposit of 1 crore, today if you get that 1 crore, what will it buy? I think investors, retail investors should be really looking at that. Secondly, why stocks are the best form of investment? This is because when you are buying a business, stocks is buying a business, which I told you in the beginning of my interview, is you are buying a business which sells a service or a product at a profit, and that profit is a little bit of it is distributed to you by way of dividends, and the rest is plowed back into the company. The business owns land, machinery, real estate, plants, knowledge workers, patents, everything it owns, and it grows. Once it grows, it has a pricing power, because in inflation situations it's also able to increase its prices. That's why if you really see the way equities have returned from inception, then equities have returned about 18% per annum compounding. Now that's a phenomenal compounding growth rate. So I would say the retail investors, if you are young, 24, 25, 26, 30, I don't think that you got to be putting all into equities rather than getting scared and just putting into debt and all, because you are eroding your money. As far as real estate is concerned, what are your goals? Do you have your own house? Where are you staying? It would depend upon individually, and everyone wants a roof over their head. So that real estate would depend upon individual choices.